Today, every day, small cap investors visit Agoracom knowing this is the day to discover the world's next great company, to have their dreams come true. That's why I take to the open road, to find them, to tell their stories, to engage them, to bring them to life, because they want to connect with you from your office, your phone, your home, anywhere. Agoracom, find your dream. Welcome to CEO Interviews, a production of Agoracom in which we take the time to speak with small cap executives about what's going on at their companies. With us today, it's a special three-way interview. We've got Rob Edwards. He's CEO of Affinity Metals, trades on the stock symbol AFF on the TSX Venture Exchange. And special guest, he's back for the second time, but not for months, Ronald Stofferle, Ronnie as we like to call him. He's a partner of Incrementum AG, a founding member of the Affinity Metals Advisory Board, and most importantly, he's a publisher of In Gold We Trust, which the Wall Street Journal called the gold standard of gold research. His next widely anticipated publication is coming out in just 19 days. It's been downloaded almost 2 million times already. So Ronnie's definitely going to tell you how to download the latest version when it's out. For those of you who are new to Affinity Metals, the reason why we're having this conversation, Affinity controls the Regal property. It's an incredible asset in BC. It has a history of polymetallic production, hosts several past-producing small-scale historic mines. In fact, a feasibility review was done back in 1991 that put Regal into production at just $1.75 an ounce of silver. Now, that needs to be updated to the current 43-101, but it tells you how significant it is. And last week, the company announced some pretty great results, specifically a new silver discovery of 11 meters of 143 grams per ton of silver. That's what we're here to talk about. Guys, welcome to the show.
Good to be here, George. Thank you.
Hi, George. Hi, Rob. Good to see you.
Ronnie.
Hey, Ronnie, let's start with you because Rob and I had a conversation specifically about the results last week. So now I want to see if we can get a third-party, bigger picture here. What are these results? How good are these results, especially that new discovery of 11 meters of 143 ounces, grams per ton of silver? If it was ounces, we'd take
that too. Yeah,
grams per ton of silver. Tell everyone at home how good is it from your point of view?
I think it is a discovery hole. I was pretty excited to see those numbers. I think that the market didn't realize what it means for the company and what it means for the property. From my point of view, we really have to find now. That's the big task for Rob and Darren. Obviously, they have to find some sort of the engine, of the whole system. But this could definitely be a monster. And I think one of the main reasons why I got involved was, first of all, I really liked the area. I think it's a huge property, and if you have a closer look at the Sullivan mine, people tend to forget it was owned by Teck at the end. It was in production for I think more than 90 years, and it was one of the biggest polymetallic mines in the world, actually. So from my point of view, there is a fair amount of a fair chance that we could be on the verge of finding something similar. Of course, it's still a long way, but I'm really excited about the 2020 drill campaign, and I was really happy to see those numbers because, as I've said, I think it's really a discovery hole.
Now, is this devil's advocate for someone watching at home or listening by podcast? Is this potentially you're talking your book because it might have similarities to the Sullivan mine, or is this a case of if you weren't happy, you'd be cutting and moving on to your next investment? So basically, what I'm asking is, have these drill results supported the very reason you put Affinity into your portfolio to begin with?
Yeah, I would say so. I mean, I have to say that I'm only advising two companies at the moment. One of them is Affinity, and the other one is Tudor Gold. I had plenty of offers to advise or join the board of companies, and I always refused. But I mean, we have all seen the grab samples from last year. They basically were way above the limits of the laboratory. Now I think the drill results were fine. We shouldn't forget that the last couple of weeks were pretty tough in financial markets. So we have seen this liquidity crunch. I think that many market participants kind of had other things to do than to study drill results of small junior explorers. So this is, I think, one of the reasons why many market participants overlooked those results. But I think they're significant. I talked to Rob and to Darren about them. I saw the video that you did with Rob, and it very much confirms my initial thesis.
Rob, do you get nervous at all when because it's other people have said it, Ronnie said it now, when people compare Regal to the Sullivan mine, and even though it is early, does that part make you nervous at all, or do you have a confidence in saying, hey, we don't know if we're going to get there yet, but man, we have a lot of similarities that make me feel confident?
George, we have a lot of confidence in the Regal property, and there's a lot of reasons for that confidence. Last of which is these drill results that we got this spring, and we're excited because all of the values of the metals that we're getting out of both as Ronnie talked about, the samples that we had last fall, the drill results this year. All of the things are pointing to that very high grade mineralization, and we're looking for the source of that. And we've got some great targets from our geophysicists, and that are substantiated by the geology surrounding them, that we do have a real chance here at finding the engine to all of this, mineralization we're seeing in all of the other areas of our exploration. So the confidence is only building. And we're looking forward to this summer to substantiate those targets as well, and put this program and property on the map.
Ronnie, is Affinity Metals moving into a rising tide situation? Is a perfect storm coming for precious metals, gold and silver, that sooner or later, you mentioned earlier that the market may not have understood the significance of these drill results, and that's probably because people have been distracted with some other things, obviously, in the last 30 days, right? But we'll get into the specifics, but first let's start off at 30,000 feet. How are you seeing the gold? And I don't want to take away, by the way, everything that's going to be coming out of your report. So we don't want to steal your thunder, but generally speaking, how bullish are you on the gold and precious metal space going forward?
I'm very bullish. We just did the monthly reporting for one of our funds that we're managing, and the fund was up 40% just in April. And I mean, this is a performance that is really unbelievable, actually. But it also shows you the enormous volatility that we've seen in the last couple of weeks. Don't forget, March, the fund, for example, was down almost 20%. We're seeing this big roller coaster ride in financial markets. Gold actually perfectly did its job. Gold did exactly what it's supposed to do in a crisis, in a liquidity crunch. So basically, it preserved your purchasing power. It balanced your portfolio, because at those days when gold were selling off, gold performed perfect, basically. Yeah. So I once made, we're playing football over here, so not American football but soccer, and I made the comparison to a good defender, Franz Beckenbauer. He was one of the best defenders. You know him, yeah. And I said, gold is kind of the Franz Beckenbauer of your portfolio, because very, very reliable in the defense. But of course, I mean, you shouldn't only have defensive players on your team. You also need offensive players. And I think this is the moment when mining stocks come into play. And what we are seeing at the moment, just have a look at the volume of the large caps of Newmont Mining, of Barrick. I mean, they had significant inflows the last couple of weeks. We are seeing that generalists are coming into the market. We're seeing that many institutional players are now coming in the market. We're seeing that some sort of a renaissance of gold and also of mining stocks. And we should not forget that, first of all, we're having the currency side. So, you know, most of the commodity producing countries have got very, very weak currencies, Canadian dollar, Australian dollar, and so on, versus the US dollar. So this is one big driver for many producers. Then you've got energy costs coming down dramatically. And we shouldn't forget that we're coming out of a basically 5-year bear market. So most of the companies are really lean. So at the moment, we are really seeing big momentum. There's lots of capital coming into the market. And of course, it goes to the large caps first, but then second and third stage, it goes down to the mid caps and then to the juniors. So I expect the whole environment for small caps to become significantly better over the next couple of quarters. And therefore, I think it's a fantastic environment for us.
Yeah, Rob, it must make you feel good to see a dollar, your Canadian company, your project is in Canada, and the Canadian dollar is hovering around, 70 cents. So when you look at numbers, I know it's still early, but when you look at that historical number, how much better the economics become with a weaker Canadian dollar, and you're just increasing, your reserves there.
Yeah, the property that we've got and the company that we started here with Affinity was all based on waiting for this bull market. And we never expected all of the criteria for this bull market to come together in such a perfect storm. We waited for a couple years, kind of finding the right property and building the company and building the contacts in order to have this be successful, as we waited for that bear market to subside and the bull market to take over. I think our timing is good. I think our property is better, and it's shaping up to provide us very good economics, even if you just consider the existing pre-43-101 reserves that are there. This new discovery, as Ronnie put it on the Alco project, also gives a lot of optimism for what is already there, what we've already found. I mean, we don't know true widths and all those kinds of things, but we do know the mineralization is substantial. We do know the zone is wide, and we do know the grades are good. And so when you put that all together, as far as the economics go and the precious metal bull market that we're seeing, we're really excited. We think we've timed it well, and we're ready to go forward.
Ronnie, a lot of people are talking about, and this could be of immense help to Affinity, not that it needs it, but immense, some big numbers, $5,000 gold and things like that. And I've seen those before, and I'm not sure how seriously I've taken those. But last month, or over the last 2-3 weeks, we saw some potential real, let's just say it, we saw a lot of theory that there were physical gold limitations, physical gold scarcity, that there wasn't enough around, that COMEX, that there wasn't enough at the London Metal Exchange, there wasn't enough in the US. What do you make of that? Do we have a real problem that, in fact, and how would that impact the price of gold, the paper market? Would that adversely impact Affinity Metals if that was the case? Because, those prices might drop because they're not backed by anything there, or would the price of gold skyrocket because all the physical gold is actually gone? Which way? Because one's paper, one's physical, but they're interconnected. How do you make that? What do you make of that situation?
Well, I have to say that many things that were said or written the last couple of weeks were nonsense, and people should not forget their logistical problems happening at the moment. There are no flights basically. for example, from London to New York, they canceled 97% of all flights. So it is a really logistical problem. Then on the other hand, you've got this implosion of supply, because the three biggest refineries, they're all in Ticino, so in the Italian part of Switzerland, and they refine roughly 60% of all the gold. They had to shut down because of the corona crisis, because they had mostly Italian workers at the factories. So at some point, many gold dealers said, okay, we are running out of product. Yeah. And then on the other hand, you had this explosion of demand. There was even my ex-girlfriend, she called me. I haven't talked to her for 10 years. And I said that in another interview. She called me and said, hi, how are you? I said, yeah, okay, why are you calling? Yeah, I'm fine. I'd like to buy some gold. Can you help me? And I said, yeah, sorry. So there were people buying, it was really panic buying. So if you're a gold dealer and then at some point, okay, there's no supply coming in, but demand is like 10x, of course you have to raise your prices. And I think this was really one of the main reasons why we saw this disconnection. We shouldn't forget, for example, at LBMA there was plenty of material, but not in the right dimensions and in the right sizes. So from my point of view, I've always said nobody can really tell what the real price of gold is. I always said there's intervention happening in every market. Yeah, why shouldn't it be in gold? I mean, there's massive interventions happening in bond markets. The Federal Reserve now buys junk bonds. I would call it an intervention or a price manipulation. There's the biggest price manipulation is in interest rates, of course. Yeah. We're seeing that many central banks are buying equities. So I think it's not only in the gold market where there's intervention happening, but on the other hand, I always said if you want to hedge against worst case scenarios, then of course you have to get the real stuff. You have to get physical gold. Don't wait for financial Armageddon and hold a certificate or a paper contract. But if you say, okay, I want to make performance, I think that everything might get a bit troublesome and worrisome. But at some point, it's going to get better again. But the price of gold will rise in that environment. Then you can buy what we call performance gold. Yeah. So actually profit from rising prices over mining stocks, for example. And as I've said before, the risk appetite is coming into the market again. I think this is really, the mining space is coming into the spotlight again. Because
is mining a risk-on asset? Isn't the risky assets more the high tech? The high tech stocks as opposed to gold?
Yeah, we've got a great chart in this upcoming In Gold We Trust report where we make a relative strength analysis of the mining stocks versus tech stocks. And you can see that mining stocks started outperforming tech stocks. So there is some sort of a sector rotation taking place at the moment, which is really significant. And we should not forget, you will have reliability and predictability in the mining space, yeah, because who can say how many cars is BMW gonna sell in the third quarter? No idea. Will it be down 70%? Will it be down 80%? Whatever. How many planes will Boeing sell? Nobody knows it, but you've got for the mining space, you really got predictability. And therefore, I think, most of the companies, they really did their homework during the bear market. They're now really lean. They cleaned their balance sheets. They've got good structures. So there is money coming into the sector. And we can already see, there's M&As picking up. There's really good M&A deals. There's lots of interest coming in. And I think if we talk not only about the gold space, if we talk about base metals, if we talk about commodities, I think this is the most contrarian bet that you can make at the moment, because nobody cares about it. But we shouldn't forget, this time around, it's not only monetary stimulus, it is also fiscal stimulus. And the job of central bankers is basically to create inflation. And now it's not only central bankers, it's also politicians. So I think we're seeing really a strong case for rising inflation. And with all those infrastructure projects, I mean, those are really trillions. You're losing sight of the dimensions. I cannot imagine that commodity prices will not be positively affected by those measures.
Right. And I like that theory better than some people. You know, I've always said one criticism I have of many market commentators when it comes to metals is the world's going to come to an end and you need to have gold, and gold be $5,000 and $10,000. And I always say, well, what's the point in having gold at $5,000 or $10,000 if the world's coming to an end? And the second part is, I never thought that made for a very good marketing message. Hey, why should I buy gold? Well, the world's going to come to a financial end, so you should buy gold. Just doesn't resonate. So I'm glad that you're talking about real fundamentals. Inflation is coming. I mean, it has to, right? The whole world, look at the whole world did. And you're going to have demand from a lot of infrastructure projects and a lot of things happening. So I'm glad you're taking more of a logical approach that way. The silver has never been cheaper relative to gold. So what are your thoughts on the silver gold? On gold silver ratio? Is gold coming down? Is silver going up? Is gold going up? Silver going up more than that? How does that ratio get returned to normal, or maybe not?
Well, we've got actually a special chapter about silver in our upcoming report. I started proofreading it today again, and I'm really excited about it. And really reading our chapter on silver, it made me hit the buy button for some silver stocks, because it's such a good fundamental case. We should not forget silver relative to gold is on the cheapest levels in the last 300 years. So we have seen a gold silver ratio of 125 in March, which means for 1 ounce of gold, you can buy 125 ounces of silver. Right. Now, historically, since 1971, this ratio was at roughly 45 to 50. So our call has always been that in the course of a bull market, in gold, silver outperforms gold. So the gold-silver ratio should fall. But we also see that gold works much better in a deflationary environment, while silver profits from rising inflation. Now, what we've seen in the last couple of weeks, we shouldn't forget, this was like, it was like an avalanche, an earthquake, a thunderstorm at the same time. So it was a market crash in equity markets, in bond markets. The dollar was going through the roof, while oil prices collapsed. 15 trillion of wealth, of paper wealth, basically were wiped off. So it was a hugely deflationary environment. Now, of course, central bankers this time, they were much more aggressive than in 2008. So Stephen Pollers, for example, I think that's the best quote, and it says it all. He says, he's the governor of the Canadian Central Bank. He said, a firefighter has never been criticized for using too much water. And
I like that quote when it came out. That was actually a really good quote.
And that says it all. I think they are very, very determined to print enough. It will probably be too much, because they are forgetting about those time lags. But I think that once inflation becomes a concern, and I think we're already in the starting phase of that, then silver should dramatically outperform gold. So why shouldn't we go back to gold-silver ratio of 40? I can imagine that, of course. So from my point of view, silver is one of the biggest contrarian bets at the moment, with a fantastic risk reward.
So I'm going to ask you a couple more questions, but before I do, for everyone at home or watching or listening, how do people get the next In Gold We Trust report? Because again, I want to say what I said at the outset, the Wall Street Journal called the gold standard of gold research. So how do new people get their hands on your report?
It's pretty easy. Just have a look at ingoldwetrust.report. You can download the report and all our previous 13 editions totally for free. You don't have to register at all. It's available in German, in English, and also in Mandarin.
Wow.
We will be publishing on 27th of May. But I have to warn you, it is quite a brick. I think we're going to hit new all-time highs, 350 pages. Because I think, there's so much interesting stuff happening at the moment. And sometimes investors, I don't know, people, they work a lot, but when it comes to investing, they don't take their time to invest in, invest time into thinking and building their framework. So for us, we tend to write a bit longer, but it should be like the only piece that you have to read about gold every year, because we really try to analyze the market from different angles. Fundamental analysis, of course, analysis of central bank actions, of the debt situation, technical analysis. We have a look at the sentiment, but we also write about financial repression. We write about gold in the Bible, for example. Really interesting stuff that is written about gold and silver in the Bible. So there's lots of interesting stuff, but there's not only the extended version, there's also a compact version which is slightly shorter. And yeah, 27th of May is the big date. And as I've said, you can download it for free on our webpage.
So for everyone at home, remember, ingoldwetrust.report. That's where you're going to find it. Do you talk about, going back now to a couple of questions for you, Ronnie, do you talk about juniors like Affinity Metals in that report, or is it more macro?
No, it's mostly macro. I mean, of course, we write about mining stocks and what's going on in the mining space, how the sentiment is, what changed for the better or the worse. We're writing about technology, for example, how it's changing the mining space and how it affects exploration, for example, what you can do with using new technologies in exploration to make it more efficient. That's pretty interesting. But we also write about ESG, for example, which is becoming a really big topic in the mining space. So it is more macro, I would say.
All right, so then let's talk about it here. What's your vision on when does the market catch up to juniors like Affinity Metals? When does that trickle down happen and it really starts to benefit companies like Affinity? Which, by the way, it's benefited already, because if you look at the chart over the last year, it's performed, admirably nice. 2 steps forward, 1 step back, 2 steps forward. So no one can complain about that. That's for sure. But when do we get that point when people really start to take a serious look at quality juniors, not the low quality, but companies like Affinity?
I think this is it is not happening yet, but I think it will happen. And I always tell people, you have to do your homework now. You have to prepare. Because the next stage will probably be in the mid caps and then in the junior space, in the silver space, and so on. And as I've said before, there is this sector rotation. This is happening. What we don't see yet is, for example, if you have a look at the ratio between the GDX and the GDXJ, you still see that juniors are underperforming the large caps. So this is still happening. But on the other hand, what's also really interesting, and this tells me that the party has only started. We're seeing now, if you have a look at the ratio between gold and the S&P 500, it used to underperform since 2011. So basically, equity markets were the place to be. This changed fourth quarter of 2018, and now we're really seeing that gold is building up relative strength against the equity markets. And I worked in the bank for many years, and I know how long all those decisions take, and how how long it needs to trickle down and to get confidence for those sort of bureaucratic institutions. So what we're seeing now is many banks say, okay, perhaps you should own some gold in your allocation. We're far away from this extremely positive sentiment like in 2011, where every Wall Street bank had price targets 30-40% above the current prices. But we're seeing that many market participants, banks, private banks, institutional players, they're coming from the sidelines and they're entering the field now. They're starting to play, but it just takes time. And I think for the junior space, I would be a liar if I would say it's going to happen now, but it is a process, and this process is getting started now.
Rob, how does a rising precious metals, Ronnie's bullish. How does a rising precious metals environment impact the urgency with which you want to really get to work on Regal and really figure out what you've got there? I mean, at least in different stages. You're not going to figure it all out in one summer, but what's the sense of urgency and excitement that you have going into the summer and the program you've got lined up?
Well, first of all, I want to remind you of George. I've told you how fortunate I think we are to have Ronnie as our advisor. The depth of knowledge that he has in writing the In Gold We Trust report and the background that he provides us for moving forward and navigating the environment with which the juniors are playing at the moment is invaluable. So I think that gives us a leg up, so to speak. And we look forward
especially when you're only one of two companies that Ronnie's advising on. I think that's pretty damn impressive. Fortunate's
an understatement. But looking at the bigger picture as far as what we want to do with Affinity and the Regal project specifically, number one, we know we're not there yet. The capital markets haven't responded as quickly as we'd hoped in order to raise money at reasonable prices and to facilitate the drilling and the exploration that we want to do. We've had some success there, and we expect to have more given the positivity of the capital markets. And as Ronnie pointed out, the mainstream institutions starting to feel more confident in recommending those types of investments to their clients. And so we're seeing some of that now. We're seeing the interest.
Hold on, Rob. Hold that thought because I want you to continue. But for everyone at home, you're also being a little bashful there because since July, from July right up until PDAC, your stock moved from about 5 cents to 25, 26 cents. So it's not that. Yeah, so I know you're not the guy to toot your horn, but I want to make sure people at home say, hey, and you're still holding strong in the 16, 17 cent range. So that's pretty good performance in a year.
We've seen great support as far as the market price and recognition of the kind of asset that Affinity has and the company that we have, our share structure, all are being recognized. As we get to see more eyes on us, though, I think we'll see further strength in that and ability to raise money at those higher prices, which is what we want. We don't want to dilute our shareholders, just like any company doesn't, but we're extra sensitive to that. And so as we move forward, that'll be one of the considerations that we take into account as we plan our exploration programs. We want to make sure that we test our two major targets on the Regal. I mean, that could be a blockbuster as far as getting something in the drill holes on those two major targets. That really would set us up for a world-class project. In the midst of that as well, we are also keeping an eye out for other projects. I mean, the bear market still is around us as far as picking up properties of good value and interest. And we're seeing some of that, and we're taking advantage of that along the way and actively looking for other projects as well. Not to downgrade.
Yeah, not to distract from Regal. That's
not to distract at all.
You've got something there, that's for sure. People keep talking about Sullivan Mine in the same sentence.
But just looking at the bigger picture, as you pointed out, George, there is a lot to take advantage of. The market still isn't up to full steam, and in those environments, you have to take advantage of what is presented to you. And we've been in this business quite a while now, and are glad to recognize those opportunities as they come along.
Ronnie, last question, as far as juniors go, how big is Affinity in your portfolio as far as juniors? I know you probably got bigger positions in the majors, but how does how? And I'm not asking for an exact ranking, but is it pretty significant? And if so, are you looking to add more as time goes on? Because the company's sitting here at a $6 million market cap with some pretty spectacular numbers.
I think it's definitely one of my biggest positions in the junior space, and I mean what I liked most about is first of all, management is fantastic. They already did a great job with American Creek. Then the shareholder structure, I mean, that's really tightly held, and you can tell that Rob and Darren are really keen not to dilute, and I think this is one of the major problems that the whole sector had in the last couple of years, that it was basically hyperinflating their shareholders. So this is what I really like, besides the geological potential. So yeah, I mean, I think we've got a great drill season ahead, and therefore, yeah, as I've said, we're all really excited. We know we've got really good shareholders. I think word got out in the last couple of months, because many people also realized, okay, that Ronnie now joined the advisory board of Affinity. Let's have a look at Affinity and just talk to Rob. Yep. and get a view on what they're thinking about the property. So I think it really appeared on the watch list of many investors, and that's what's really making me excited.
Gents, thanks for joining us. It was great to kind of revisit Regal again, but from this time from the perspective of, the more 30,000 foot level, I guess, out of Ronnie. And for everyone at home, I guess, Ronnie at the end of the day isn't obligated to be at Affinity. He's got great stuff going on. And if he didn't like what he saw, I'm pretty sure he would be moving on to the next one, right? That's But to hear Ronnie talk about that, and Ronnie, talking to you, to hear you talk about Affinity that way, and mentioning Sullivan, because other people have mentioned, but for you to mention that as well, that's really, really encouraging. And we thank you for being here to share that.
Thank you very much. Thanks.
And remember, everyone, ingoldwetrust.report. Even if Ronnie says it's 350 pages, it's 350 pages of some of the best financial reading you'll ever do. And remember, we've got a lot of time on our hands right now. So there's only so much Netflix we can be doing, yeah. And there's only so much social media. And the same goes for your due diligence in Affinity Metals. You've already heard what we had to say, what Rob had to say, what Ronnie had to say. Now a great summer program is coming. Take the time, do your due diligence, get to Agoracom, review all the information we have there, then use the link to get over the Affinity site to take a closer look. And it behooves you, given the fact that Ronnie's talked about we're going into a real rising tide here on precious metals. It really behooves you to do that. Rob, I'll leave you with last word as to what everyone should be looking forward to.
Well, I think you heard Ronnie today say that he convinced himself again on the silver market. And I think if he can convince himself, I think he can convince anybody. So the fact that we have, a real rare situation with Affinity and the Regal project, we have two targets, and it's differing geology across both of them. Gold and silver are going to be in the forefront of investors' mindset. And we have a property that's going to, I think, be very, very substantial as far as the implications that it could have for our company and for investors. We're in a bull market, and we're going into a bull market, as Ronnie has talked about. And I think our timing is great as far as the properties that we have and the potential that is there. So I say this every time we talk, but I'm really looking forward to this exploration program and seeing what we can do with the property.
I think everybody is. I know we are. I know Ronnie is. I think everyone's looking forward to it, especially with the numbers you came out recently. So we're all pulling for you, Rob. That's for sure. We're all wishing you great luck and looking forward to having both of you on again, in the middle of the summer and during the summer. But for everyone at home, Rob, ballpark, when are you starting the drilling program at Regal?
It'll likely be the end of June, first part of July. That's when we won't have to fight the snow and spend so much money. So that's kind of the timing we're working on right now.
All right. So, by then we'll all be wearing short sleeves. We'll be outside, God willing, a lot healthier and a lot healthier and safer than we are today. But Thanks for joining us, Rob. For everyone at home, Affinity Metals, TSX Venture, AFF, and Ron Stofferly, In Gold We Trust Report, ingoldwetrust.report. Thanks for joining us, guys. Fantastic information, great vibe. Stay healthy,
Ronnie.
and Ronnie,
George.
thanks for joining us from Europe.
Thank you very much.
So late.
Thank you.
We appreciate it.
Thank you very much. Thank you. Have a good one. Take care.
Take care.
Bye, everyone.
Bye-bye.